Hey everyone, and welcome to the channel. It's Signal Studio here, and get ready for your essential pre-market briefing for Wednesday, June 11, 2025. The clock is ticking towards market open, and we've got some crucial insights from yesterday's closing data that could shape your trading day. Yesterday's session saw Nifty close at 25,004. As always, the big question is what's in store for today? Let's dive deep into the numbers, starting with the global picture. First, a quick recap of how our markets fared on Tuesday. Nifty closed flat to slightly positive, ending at firstly 5,151.04. Back Nifty also saw some choppiness. The India VIX, our fear gauge, was at 1410 yesterday, down slightly by zero point 0.7, indicating moderate volatility. Now, let's look at the global backdrop. Overnight in the US, the Dow Jones Industrial Average closed flat after a volatile session, trading in a tight range, while the S&P 500 rose about plus 0.55% and the Nasdaq Composite climbed approximately plus 0.63% on the back of tech gains. Crucially for us, the SGX Nifty, our early indicator, was trading around 25,198.5 at the end of the US market close, which is about 54 points higher than yesterday's Nifty close of approximately 25,144.5. This suggests our market could open slightly higher today. But remember, things can change quickly in the pre-open. Now, let's talk about the domestic and international news flow that could move the market today, Wednesday, June 11th. The RBI has discontinued daily variable rate repo (VRR) auctions from today, signaling ample liquidity in the banking system. The most significant geopolitical development overnight and into today revolves around the resumption of US-China trade talks in London. There's been a cautious optimism, with comments from US officials describing initial discussions as fruitful and good meetings. While no concrete outcomes were announced from previous sessions, markets are encouraged by the constructive tone and willingness to continue dialogue. Any breakthrough here could significantly improve global risk appetite, impacting trade-sensitive sectors and overall market sentiment. The US dollar index, DXY, is a key focus, fluctuating around 99.00 and showing a slight positive bias due to US-China trade talks and anticipation of today's crucial US inflation data, which could impact the Federal Reserve's rate outlook. A stronger DXY often raises concerns about FI outflows from India. Crude oil prices saw a brief surge past $66 yesterday on trade talk optimism, but later retreated to around $64. Gold shows mixed sentiment, pressured by a stronger dollar but supported by ongoing global uncertainties. All right, let's get into the technical and, more importantly, the open interest data from yesterday, June 10th, which gives us a crucial glimpse into where the big players are positioning themselves for today's session.
Looking at the Nifty chart, yesterday's close at 25,104.25 puts us in a crucial zone. For today, keep a close watch on these key levels based on yesterday's data.
Immediate support for Nifty is likely around 25,000 and then 24,900. These are psychological levels where buyers might step in if the market dips. On the upside, immediate resistance is strong at 25,200 and then 25,500. Breaking these levels will be key for any sustained upward move today. Now, let's zoom into the open interest data for Nifty as of yesterday, June 10th. This chart is telling us a very clear story. Notice the massive red bars call open interest at 25,200 and especially at 25,500. This indicates a very high concentration of call writing at these strike prices. What does this mean? It suggests that traders believe Nifty will find it extremely difficult to move above 25,200 and even more so above 25,500 and today. These are strong resistance zones. The darker red within these bars indicates a significant increase in call writing at these levels yesterday, reinforcing this bearish sentiment on the upside. On the flip side, the green bars put open interest, while present, are not as overwhelming as the calls. We see some decent put build up around 25,000 and 24,9000. This suggests that traders expect Nifty to find some support at these levels, potentially acting as a floor if prices fall. The overall put call ratio PCR calculated from yesterday's total OI stands at 0.76. A PCR below 1 generally indicates a bearish bias, as there's more call writing than put writing, suggesting market participants are bracing for either a fall or limited upside today. This is where we peel back the layers and see who's doing what behind the scenes. We're looking at the positions of FIIs, pros, clients, and DIs in both index futures and options as of yesterday's close. Both institutional categories show a cautious to mildly bearish bias in their derivatives positions. FIs are hedging with long puts, and pros are adding to futures shorts. This is a significant factor as these are the smart money players. Retail clients are bullish in futures and are primarily selling options, both calls and puts, which suggests they expect a range bound market or upward movement where they can profit from premium decay. DIIs are indecisive, likely managing their cash market portfolios. In summary, given the FII's long put accumulation and pros short futures, combined with the heavy call writing at higher strikes, the market is likely to face resistance on the upside. The significant retail long positions in futures and option selling could contribute to a volatile, potentially range-bound session with a downward bias or limited upside, especially if global cues turn negative. Watch out for any early breaks of the 25,200 Nifty level. If it sustains below 25,000, further downside might be seen. So, what's the overall outlook for Nifty today, Wednesday, June 11th? Considering the strong call open interest at 25,200 and 25,500 combined with the cautious/bearish stance of FIIs and pros in their derivatives positions, Nifty is likely to face significant resistance on the upside today. While retail is bullish in futures and selling options for premium, the institutional money seems to be leaning on the side of caution or even anticipating a potential downside. Expect a volatile session, potentially range bound initially, with a downward bias or limited upside, especially if global cues turn negative. Watch out for any early attempts to break 25,200. If Nifty sustains below 25,000, further downside might be seen. Remember, market volatility is inherent. Always practice strict risk management, use stop losses, and do not trade blindly based on any single indicator. Important disclaimer. Please remember, this video is purely for educational and informational purposes and should not be considered financial or investment advice. Always consult with a SEBI registered financial advisor before making any investment decisions. If you found this analysis helpful, please hit that like button, share this video with your trading buddies, and if you haven't already, subscribe to the channel and hit the notification bell so you don't miss our daily pre-market reports. Thanks for watching, good luck with your trades today, and I'll see you in the next one.